Hello and welcome to another TheTraderGuy.com video. This is Chris from The Trader Guy, and my screen in front of you shows the Australian dollar. Now, I bring up the Australian dollar for several different reasons. What I found interesting was at the end of the day, we had a bit of an attempt to close the gap on a lot of risk on currency pairs. Most people don't think of the euro US dollar as a risk on currency pair, but it is. It's not the most highly related one to risk, but it does tend to rise when risk appetite rises. We also saw it in the Kiwi dollar and a couple other currency pairs during the New York Monday session as a result of word of a possible agreement coming out between the Troika and the Greeks on the next tranche of bailout funds. The reality is they were always going to get the bailout funds. That's not really the concern of the market, and I feel that a lot of smart money is probably looking at this as an opportunity to sell. Now, having said all of that, the stock markets did rally and everything else. So I started looking around at the charts, and one of the ones that caught my eye was the Aussie dollar because it is not acting quite right. Unlike some of the other ones, like the Euro US dollar has formed a perfect hammer for the day, and there's only about an hour or so left in the day, so maybe 2 hours on my chart. So that's part of the reason why I'm going ahead and calling it the day. The Euro US dollar formed a nice hammer. The pound did for the most part, the pound dollar and everything else. But here we have the Aussie, and it's not acting quite right. The RBA, the Royal Bank of Australia's minutes from their last monetary policy meeting is coming out at 9:30 p.m. New York time Monday night. That would be early morning, I believe, about the same time in the morning in Australia. Could be wrong on the time change. You'll have to look at your local time zone converters on the internet for that one, but it is 9:30 New York time. And as such, I feel that the markets are waiting on that, and any sign of possible loosening or rate cuts in Australia could send this pair down. I find it interesting that it is kind of struggling here, and one of the things that I'll do, and this is one of the things that I teach a lot of people, is I will look at it in relationship to the Kiwi dollar. Now, I see a couple different things right here. I've had the 125 line forever because it seems like that's an area the price is drawn to. Yes, we got a little bit of a bounce here towards the end of the day from the lows, but it just looks sick. It looks like a sick chart. Yes, we made a high, but look, that was a perfect shooting star, and if you shorted that, and as you can see, there was a reason to do that at that point, you're still in this trade, you're quite happy. So basically this sets up a break of the lows here, and I would go ahead and call them 123 because, why make it more complicated than it needs to be? But if we see a break of 123, we could see the Australian dollar fall much further. If nothing happens, if there is no, let's say, announcement that something, they're going to cut rates or whatever, it still looks to me like the Australian dollar is much weaker than the Kiwi, at least in the recent time frame. And as such, if we get something that should cause a pop in the market, a pop in risk on appetite, that bodes better for this chart, and this is the Kiwi dollar. This is triangulation. I talk about it quite a bit, where you take three currencies and kind of see how they are all acting in relation to each other. Now, notice on the Kiwi dollar that we have a bit of a hammer here. It's not placed perfectly, yes, I get that, but it is placed above a support area, and as such, it looks like it's ready to try to make a move to about 84 if we break to the upside. Now, I can't guarantee that'll happen, obviously, but it does look like it wants to remain in this consolidation zone. I don't know what the Australian dollar wants to do, and odds are we probably won't until after the RBA meeting minutes are released, and that could send it much lower. If that's the case, all bets are off. But if we do get a pop, at least personally, I will be looking at the Kiwi dollar if commodities start to take off, perhaps on Tuesday, for a short-term play. I'm not looking for anything magical. I think 86 is a high that we will probably not break anytime soon, at least until the global markets feel a little better about themselves. Of course, if we break the 86, we're probably going straight back to the top. But there's just simply too many risks out there in general to take these currency plays on risk on for too awfully long. But as you can see by looking at three different charts, the Aussie dollar, the Aussie Kiwi, and the Kiwi dollar, you can gauge two things. You can gauge dollar strength or weakness. If you see dollar weakness, okay, well, you know more than likely the commodities are going to rise, and the Kiwi and the Aussie are both susceptible to commodity markets and their movements. So then you look for the strongest of the two, and you buy the stronger of the two and sell the dollar because it's weak. Conversely, you can do it the other way around. If you know that the commodity markets and the risk off trade is on, you know that the dollar will get bought under 99% of the scenarios out there. And then you look for the weaker of the two. So, for example, in this case, we see the Australian dollar as being the weaker of the two. So if the markets plunge, it looks, at least at this point in time, that the Aussie would fall much harder than the Kiwi. Kiwi strength, or at least relative strength to the Aussie, makes it the more attractive currency to own if you're long. And then, of course, you don't want to short it because you want to short what's weak. Forex is simply matching the weak and the strong. You want to buy the strong, sell the weak. That simple. By looking at the way these charts kind of all fall together, you can do this. Another common one that you can do this kind of triangulation with actually is Euro US dollar, Pound US dollar, and Euro Pound. These are all liquid currencies. They are well traded currency pairs. So if you see that there's dollar weakness, for example, you look at Euro Pound and you see which one of those two currencies are stronger than the other one. Both of them can rise, but the idea is to squeeze as much as you can out of every trade. So if the euro looks stronger than the pound, then obviously you want to go long euro dollar, and vice versa, like we said in this video. Anyways, I hope you learned something from this triangulation deal. The RBA minutes are going to be released in about 3.5 hours from when I'm recording this, and that could move the Aussie dollar markets. If it doesn't, like I said, it still looks like the Kiwi will outperform either way. So currently I'm kind of avoiding the Aussie. Got any questions? Send me an email, chris@thetraderguy.com. Thank you.